So Chinese stocks have been dropping recently, and the one Chinese company I own, which is Alibaba, is down around 50% from its all-time highs. So the question is, has the story changed, or is the price drop just an overreaction? Well, that's what we're going to be taking a look at in this video. What's up everyone, my name is Coleman, and in this video, I want to go over Alibaba and whether the story around the company has changed, or if it's all just an overreaction. I'm specifically going to be going over 3 reasons why I liked Alibaba and initially bought, and whether those 3 reasons are still intact. Then I'll touch on government regulation and if the story has changed here. And finally, I'll talk about what I'm doing and whether I'm doubling down on this stock. But before we get into it, I just want to mention that nothing I say is financial advice and you have to do your own research. With that said, let's waste no time and get right into it. So why did I initially buy Alibaba, and are those 3 reasons still intact? Well, if you've ever watched any of my other videos where I mentioned Alibaba, you'll know that one of the main reasons I like this company's future prospects was because of their cloud computing business. In fact, cloud computing was one of my favorite areas because I believed it had the opportunity to be a strong area of growth and profitability for the company in the coming years. For those of you that are unfamiliar with Alibaba's cloud business, this is similar to some of the cloud computing giants in the US like Google, Microsoft, and Amazon. At the time of my investment, Alibaba was the largest cloud company in China with about 44% market share, which was more market share than the next 3 companies combined. This business was also growing incredibly fast, and in 2019, cloud grew by 54%, and in 2020, it grew by 62%. Their CEO had also said that cloud computing was still in the early stages of growth, meaning that there was more runway for this business. That said, this was a segment that had lost money for the company for years. But at the time I invested, this seemed like it was starting to change. They had been getting closer to profitability every year, and Alibaba said their goal was for their cloud business to become profitable in 2021, which was good. So now that you know my thesis on the cloud business, the question is whether my thesis on their cloud business being a nice area of growth and profitability is still intact. On that, I have some good news and some not as good news. Let's start with the good news first. As far as profitability, there have been some big changes, and just last quarter, Alibaba reported an adjusted EBITDA margin of 2% for their cloud computing segment, which was quite an increase from their adjusted EBITDA margin of negative 9% for the previous quarter. This means that their cloud computing business is now profitable on an adjusted EBITDA basis for the first time ever. Now here's the not as good news. As far as growth, there have also been some big changes, and this year their cloud business has grown by 29%, which is very good, but that number has dropped rather significantly from 54% in 2019 and 62% in 2020. Additionally, their market share has dropped from 44% last year to 38% today. Alibaba says much of this is because one of their largest customers has stopped using Alibaba's overseas cloud services for their international business. It's reported that that customer was ByteDance, which is the owner of TikTok. Additionally, China recently announced that they are building their own state-owned cloud platforms while also asking state-owned enterprises to move their data from third-party public cloud services like Alibaba to government-run cloud services by the end of next year. The government has also told state-owned enterprises that they were forbidden to renew or sign new contracts with these companies. Now, while some people say that state-owned cloud platforms will still need third-party providers, meaning that the cloud computing business model won't really be affected, I still think this entire situation could be something to pay attention to, and I especially want to see if the government continues to try and get involved in this industry. This is because I share more of the Monish Pabrai view on Alibaba's cloud business, which is that it's an industry that very few companies can play in. For example, Pabrai says that if you look at the US, there are only a few main companies, and the game is basically over, meaning that it's hard to see companies at the top losing their positions anytime soon. I believe that if this translates to China, the fact that Alibaba is already a leader in this segment is a good sign for the future prospects of this business. But government intervention could change that, which is why it's worth monitoring. Overall, I believe my thesis around their cloud business is almost entirely intact, as the business is now profitable and they're continuing to grow at a fast pace. That said, I am keeping an eye out on government intervention and their declining market share to see how that affects their cloud business. Next up, and another reason I bought this company, which is a very important reason, is because of what I would call super investors, or investors who have historically generated very good returns. Last time I made a video on Alibaba, Charlie Munger, Monish Pabrai, and Greg Alexander, who Buffett views as one of his top 3 investors, had all bought Alibaba stock. Some other investors I track, although not as much, like Ray Dalio, David Tepper, and Leon Cooperman, all owned Alibaba too. This was a very positive development for me at the time because while I liked this company for a while, I actually bought back in because of some of these super investors. Mainly because Charlie Munger, Monish Pabrai, and Greg Alexander bought the stock. So is this reason for buying still intact? Well, there have been many big changes to this recently, and as of the end of last quarter, while the stock was dropping, more super investors either bought into the stock or added to their positions. Guy Spear bought into Alibaba with 5% of his portfolio, while Monish Pabrai, Lee Ainsley, Leon Cooperman, and Ray Dalio all added to their positions. Yes, there was some selling from David Tepper and Greg Alexander, but overall, many other investors I pay attention to either held on or added to their positions, which I'd consider to be a positive development. So as far as super investor ownership, I'd still consider this reason for me buying to be intact, and it actually improved last quarter while the price dropped. Now a final reason I bought into Alibaba is because of their valuation. Even though I liked the company because of the first 2 reasons, the valuation had to be there, and at the time, it was. Back when I bought Alibaba, it was trading at a market cap of $600 billion, which puts the forward PE ratio at 23 and the price to sales ratio around 6, which was very good in this market, especially for a company growing their total revenue by 25+% a year. Yes, Chinese companies will probably always trade at a discount to US companies, but I just felt like Alibaba was trading at too much of a discount. So how does the valuation look today? Well, with the stock price continuing to fall and Alibaba continuing to put up good numbers, Alibaba's valuation is sinking lower, as you may have guessed. The market cap currently sits at $420 billion, which puts the forward PE ratio at 17.7 and the price to sales ratio at 3.75, which I think is very good. For comparison, the average PE ratio of S&P 500 large cap stocks is 21, so slightly higher than Alibaba. And Amazon, which is a similar US company, trades at a forward PE of 58. Now yes, concerns around government regulation, which I'll get into in a second, have played a role in Alibaba's valuation, but either way, in my opinion, when you just look solely at the company, Alibaba trades at a very good valuation, and it has gotten lower, meaning that so far, the majority of my thesis around Alibaba is still intact, while some of my thesis has actually gotten stronger. But now let's get into government regulation, because this is where things start to get a little more uncertain. In recent years, one of the big reasons people have given for investing in China was that they were shifting from a communist economy towards a more capitalist economy. The country eased government regulation, opened up foreign investment, and encouraged the opening of private businesses. People fear that may be starting to change though, and a lot of the recent news suggests that China is starting to regulate their economy again, turning one of the bullish reasons for investing in China into a bearish reason. Now I could give about a dozen recent stories of this, but for example, Alibaba received a $2.8 billion fine for anti-competitive practices, Tencent was stripped of their exclusive music rights, and China launched a special campaign to regulate their internet sector. This all seems to show the government's desire to reinsert themselves into the private sector. Now personally, I didn't really think that these specific events changed the story around my investment in Alibaba because I knew that some more regulation and fines could happen. So these events seem to be more of a speed bump. Plus, most of them won't really affect Alibaba, and the events that do are considered pretty minor, like the $2.8 billion fine, which isn't that large for a company their size. So while I thought many of these events didn't really change the story around my investment in Alibaba, an article came out that did surprise me, and that was the Chinese government's recent decision to turn for-profit education companies into non-profits. Basically, what China did was require educational institutions to convert to non-profit status, while banning them from selling tutoring programs and raising foreign investment, among a few other things. This was eye-opening because basically what China did was take control of an entire industry, which raised questions for me like, if China is willing to do this to the education industry, would they be willing to do the same thing to consumer or tech companies like Alibaba? Now, while many people say this was done to improve the country's expensive educational sector, this was even more regulation than I was anticipating, and it does show the government's willingness to step in and take control of an industry, which is a risk. So I do think that the story around Alibaba has slightly changed with this news, since this educational ban does add a little more uncertainty around government regulation than even I was expecting. That said, the good news is that this ban has nothing to do with Alibaba, and it's difficult to see why China would apply similar rules to a company like Alibaba as long as they continue to provide value to consumers. But I could always be wrong, so you have to do your own research. So what am I doing with Alibaba after reevaluating my thesis? Well, over the past few weeks, I've actually decided to double down, and I've actually bought a little more, between $157 and $173 a share, as I felt like a lot of the selling has been an overreaction. Although I do think the story has changed, I don't think it's changed that much to the point where I no longer like the company or feel comfortable buying or owning the stock. Plus, some of my thesis around super investor ownership and valuation have actually gotten stronger. Yes, their cloud computing business's growth has slowed a little bit, but much of that is due to the loss of one big customer, and that loss should be felt less and less as they continue to grow. Additionally, although the Chinese government has come out with a lot of different regulations and fines lately, I've looked into a lot of this, and overall, it seems like most of it has nothing to do with Alibaba. And so far, a lot of it is targeting education, Didi, Tencent, and gaming. Now this could change, but similar to Monish Pabrai, I'm still of the belief that China isn't going to do anything that would severely harm Alibaba, since they're the crown jewel of China and very important to their economy. So what they're doing with a lot of these regulations and fines are being done to send a message of who's in charge. Because of that, I'm not selling Alibaba, and in my opinion, I still think it's worth the risk reward, which is why I've decided to double down and add a little more to my overall position. But again, that's just my opinion, and I could be wrong, so you have to do your own research. With that said, if you liked the video, don't forget to hit the like button, and if you want to see more videos like this one, please subscribe down below and hit the notification bell. Thank you so much for watching, and I'll see you in the next one.